Welcome to another episode of That Crazy Triangle Guy. We're looking at Bitcoin US dollar index on the weekly time frame here. Back at the very, very beginning where this little dinosaur was. And the indexes we have pulled up on the chart are the Gaussian channel and the uh, uh, um, moving average ribbon. We have the 20-week move or whatever time frame we're on, the 20 moving average in aqua here, the 50 in yellow, the 100 in purple, and later on you'll see the 200 in red. So we're just going to look at what Bitcoin has done over its entire history. You can see in the bull run, we maintained the 20 weekly moving average as support. You'll see that, and let me move this cursor to a little arrow. You can see that we do wick through it at times, and here came into it too in the bull market, but pretty much hold it as support. Anyway, this is 2010 to 2012. And in the bear market, we fall below it and fall below the 50. And we'll see what else we do. Now here, I have some little boxes here. You can ignore most of the boxes because they weren't meant for this video. But it says 4.5 months until the halving, 56% increase. What that means is where we came up through the top of the Gaussian channel right here and retested the top. Let's see what that actually does mean because I did it so long ago I forget. So I got my little measuring device. Let's see from where we tested the top. 14 bars. That's 3.5 months. No, so that number that I measured was from where we broke through the top of the weekly Gaussian channel to the halving. 19 bars. Yeah, that's about 4.5 months. So that's what that number means. Where we broke through here in the red on the weekly Gaussian channel to the halving event. 4.5 months for back here in 2012, and there was a 56% increase in price for Bitcoin between those times. And as you can see here, again, what happened in the bear market, we were below the 20-week moving average. We came above it, kind of held below it sideways here. And then when we started the bull market, we did break above it. And in fact, we're above all the moving averages, 50, 20, 100, and 200. But we're particularly looking at the 20. And once we came up here, retested the top of the channel, we entered our bull market and maintained. You can see we dropped into it, tried to drop into it here, but stayed above it the whole time until we reached this high. We did come back down in here between our double top briefly, but then again held it as support until we entered the next bear market in 2014 and stayed below it. Stayed below it here throughout this. I'm just kind of looking at the other moving averages right now. We came down to the 100 and down to the 200 in this bear market. The various moving averages acted as support and resistance. So the 20, we came up and down through it, didn't maintain it. Well, we started to maintain it as support as we moved through the weekly Gaussian channel, but we were still below the 100. So remember that, we're below the 100 here, came up through the Gaussian channel. And here, when we did that, we came up through there 7.5 months and before the halving, and there was an 84% price increase in Bitcoin. Now here in 2015 and 16, pay attention to, because it's closely, what we're doing now is closely mimicking 2015 and 2016. It has aspects of this time period back here, and then also again in 2019. So, I mean, it's you got to take the whole picture in and look at the differences and similarities between all these and kind of come up with your own picture here. Now, once we held the 100 as support and the 20 is when we started our bull market run here. Now you can see we did kind of come through here for a couple months, but just barely below there. Didn't, and when you other than this wick here, I measured these and it was like 1 to 2% price action was below the moving average there. So we held it as support the whole time through our bull run here, and all the other ones as well. And when we crossed it again, that's when, well, before we crossed it, but the bear market was confirmed as we crossed it and crossed the various others. You can see we moved above it here again as we moved through the weekly Gaussian channel, came above the 100, and now this point when we came through the Gaussian channel, where's my little box? Hey, I got all this stuff popping up here. Oh, there's my box. Wait, no, maybe it's down here. When we came up, it was 1 year until that. Let's move this guy up a little bit. Find him. 1 year until the halving, and we only had a 20% increase over that time period, but we had the COVID interruption, and then, as I pointed out before, this was also a period where there was, we're on the weekly, I have to go to the monthly to do that, and I'm going to switch over and do that right now, just for a second. On our accumulation distribution oscillator here, well, I'll just pull this up without all the other price action. The reason we fell through, or the reason 2019 was messed up, was because the slope of this line, this red line here, it seems, I believe that the slopes of this oscillator, what it shows is whether it doesn't predict price action, but it gives a look at whether price action will be supported. And so the shallow slope of the red, where the accumulation distribution was taking place here in 2019, did not support the steep price increase, and so it didn't hold. Back here, we had a much steeper red line, as we do here in our current bull market we're starting, where we've crossed through the weekly Gaussian channel. These are all where we pretty sure where we've crossed through the weekly Gaussian channel. And then I also have various other slopes, which I went into in detail on a very tedious, boring kind of video just a week or so ago. But as you can see in the current period we are in, the slopes at key points in our price action are all very, very steep here in our current time period. And back here, a couple of them were very shallow. This one was steeper. And this green one is when price action actually did move upwards and was supported by the slope of this line. And kind of back here, we did come up, but then we had a long drawn out price increase into the halving event, and as seen by this green line. And here, we got all of them steeply rising up, so leads me to believe we'll have our price action, our move upwards so far at this point will be greatly supported. Now let's go back to where we were. On the weekly. Up, we moved all the way back up to 2022. Back here we were. And I'm not going to spend a lot of time here because it was jacked up. You can see we lost support of the 20-week moving average and fell back down to the 100 and breached that. So you can see and we also fell into the weekly Gaussian channel again. So right here, we were doomed with or without COVID. And we wouldn't have moved down this far without COVID, but probably would have struggled here. I do believe, as I pointed out before, that we could probably take out this whole section here, just remove this whole section, and you could see price action just continuing. Actually, maybe even a larger section. Match this candle up with that one, and that's what the chart would look like probably without COVID. Because you can see we came up and tried to find support here. I think we would have continued something like that. Anyway, when we did come up above these moving averages, and here it's actually the 50 was the last one we crossed, we once again held, when we entered our bull run, the 20-week moving average as support all the way up here. Didn't even come close to it. A couple little wicks right down here. And once we broke it, we did the same thing. We broke it in between the double top here in this market run. And what we did here is came down to the 50, as well as the top of the weekly Gaussian average, our channel. Let's see what we did back in 2012 when that happened. Now here, we came down. We didn't get a double top up here like the other two. Let's see. So back here, well, the double tops were kind of different. We breached it barely, didn't even come down to the 50. We came down to the 50 here, came back up above it. So maybe you want to call this our second top, and not much of one. All right. Let's move to where we are today, but we fell down back below underneath and held this as resistance until again once again we started our bull market, came up through the Gaussian channel. Now you'll notice we are below our 50, our 200, and our 100. The 50 acted as resistance here, broke above it. The 200 acted as support. Wait, oh, I'm sorry. I'm getting it mixed up with the mean band of the weekly Gaussian channel. But it did act as pretty much as support here as well. Now, we are still below the 100. That's what I wanted to point out. That's very similar to 2015, 2016. And we are holding the Aqua 20-week moving average as support here. Let me zoom way in some more so we can see better. We are currently, price action is right here at 29,621, holding the 20-week moving average as support, and you can see that we wicked right down to it. And our next move is to cross here, and I believe we'll do that today or tomorrow or heading into next week. And then once we do that, we will hold the 100-week moving average as support, as well as the 20, which will continue to move up this way with us. Once we have this as support, our this bull run will be confirmed, in my opinion, and that is currently at 31,584. Now that is interesting. Well, that's also, this red dashed line is at 31,259. That's previous support and resistance target that I had laid out here. Essentially, this fluorescent green line that I've drawn is what I think is going to, where price action is going to go. As we cross here in the next week or so, we will come up to initially just to the $32,000 range. And on this chart, I don't have it, but on my chart that has a billion lines, I've laid out resistance and support levels from areas back here that I believe we will hang out at as we move upwards. So I think we'll briefly hang out there, continue up because of the long consolidation that we've had and the level of support that we've created in this area in the testing. We will move up to the next level, which is 37,711, where we will find some resistance, come back down to 35, 36, test that. And as we move up here, we will come back down and test the 31.5 target area where the 100-week moving average will be. Then kind of up here, I think we'll move up through August, come back down in September, and continue on upwards. Now, let me stop and see how much time I got left. Alright, so this video is getting a bit long. I'll briefly go over what I'm looking at in the next few months. And later on tonight, I'll try to get another video out that has the deals with the macro events going on and how they tie into what I'm looking at here and the rest of the crypto market as well. So I do see us coming up here in the next few weeks in the month of August, up to the $37 range, maybe pulling back down a little bit, up and down here, back up to 38, almost 39, before we pull back in September, and then continue on in October, upwards and onwards, well, I'll reveal a little bit. The pullback in September, probably once people realize this run might be fueled by a possible ETF approval in September. Um, that would be the earliest date. I don't think we're going to see anything next week with just ARC only getting approved. Um, and then typically September's a down month, so not looking for a lot there. However, well, I'll deal with it more later in the video tonight. Um, so here in October, this move upwards is just what's going to happen if we get the ETF approved in October. I believe we'll move up a little bit more steeply here and more quickly. But I do see us moving up, continuing on upwards as we get closer and closer to the halving event, um, up to $62,000 by the beginning of the year into January. And I've tied these actions in with testing key support and resistance levels back in here. So you can, well, whoops, no, I don't want to do that. Let's put our cursor on. We have this on. Well, it doesn't really help much unless you're really stopping and looking at all this. But I've tied all this in with key support and resistance levels back there, and all the way up here. Pull this guy down a little bit. 62,000 you can see back here is about as high as we'll go, I think, before the halving. Maybe we get up here above the all-time high before the halving. I don't think so. I think we'll stop just a little bit short of it. And then what we'll do is pull back into the halving. Maybe not this much, but I think we'll just kind of go sideways and downwards into the halving. But that's getting way, way out there. So let's leave it there. Hit the like, subscribe, and notification bell, and all that jazz. And please do. And we'll see you next time.